and gentlemen, I am your host JT, and you're watching Black Box Trading, and we've got an exciting show for you again today. My God, what a move! What a beautiful move that we saw in the price of Bitcoin here. It's kind of funny, like the whole market hangs on every little tiny word, every single sentence that Fed Jerome Powell makes. He hinted to the slightest bit of dovishness for the upcoming September FOMC, and boom, like a 6,000 or a $4,000 move in Bitcoin immediately over a span of minutes. Just really irrational in my opinion, but we're going to dive into it. So feel free to ask questions in the chat. This is for you guys after all. And don't forget to check out the link here. This is to get into the free trading Discord where we are sharing all of our entries, exits, take profits, etc. All of the altcoins that we're buying. All that information is available for free. So yeah, don't hesitate to get into the free trading Discord where we said we were going to move. We were going to take a move off of these lows here, and we'll dive into that in just a moment. But before that, we have to all just recognize the power and glory that is Federal Chairperson Jerome Powell, the final boss of altcoin season. Not to be messed with, ladies and gentlemen. This guy, he means business. So in all seriousness, we did get this news article here just covering what Jay Powell paves. The headline reads, Jay Powell paves the way for Federal Reserve interest rate cut in September. What makes you think this? Just this simple sentence right here. With policy in restrictive territory, the baseline outlook and shifting balance of risk may warrant adjusting our policy stance. That's all he said. That's all he said. And boom, massive candle here on the daily, a 3.9% move, a $4,500 candle off of that simple sentence, that simple dovish remark that he said at the Jackson Hole meeting on Friday morning. Pretty ridiculous, but hey, maybe this will fuel the next 25 days. If the market thinks that there's a rate cut, the market needs to price in a rate cut. So the next FOMC meeting is 25 days away, which means we potentially have 25 days of rally ahead of us as we approach that sell the news event. As it stands right now, the current futures probability of is in favor of a cut, 75% to 25%. So 75% of the market is pricing in a rate cut for September, a 25 basis point rate cut. So it's looking good. It's looking good. Before we move on, let's just cover our position here. We got pretty darn close to my break-even stop loss. Wasn't in the mood to move it down, although I was thinking I needed to give the trade a little bit more room, but we've bounced off of that. We're sitting pretty now. We are kind of at a support/resistance flip here, so we do need to get back above that. But the position's looking good. We're at $18,000 in profit here on a position at 3 BTC. Enter into the trading competition, ladies and gentlemen. Scan the QR code that is popping up at the bottom there, and you can enter to win a $5,000 grand prize if you have the highest performing account on BitGet for the duration of this competition. There are 78 days left in the competition. You can trade spot or you can trade futures. It is entirely up to you. At the end of the 78 days, we're going to take a snapshot. We're going to see who has the highest percentage gains, not account growth. This is not based off of who can make the most money. This is based off of who can make the highest percentage growth of their portfolio. So if you are a rock star trader, then definitely take advantage of that because it's basically free money, free $5,000 credit to your wallet. Currently on the leaderboard, just an unnamed BitGet user at 127%. Second place is 100%. Third place is 45%. So there's definitely a lot of room for growth here. If you guys are interested, scan the QR code, do all the things, get ready, because I believe it is altcoin season. Let's just briefly check in on the altcoin portfolios. Matt, again, was not able to join us today, but his portfolio is cruising. His portfolio is doing annoyingly well. It seems that all of the coins that Matt touched just turns to gold. Now, he took a very different approach to what I took. He went with more of the kind of traditional altcoins, the more well-established altcoins, the higher market cap altcoins. I went with some of the more new stuff, some of the stuff that just was created this cycle, a little bit more degenerate. So I think that later on in the altcoin season, I will definitely play some catch up and maybe even lap him. I'm hoping to lap him. But as it stands right now, he's up 13.8%. My portfolio is still down 1.5%. We'll call that break even. In the altcoin portfolio world, the 1.5% down is basically break even. When you compare that with just holding Bitcoin at the time of the entering the competition, I am still beating Bitcoin because Bitcoin is down 2% since the competition took off. Now let's get into we'll go back into the alts. We'll talk about Bitcoin dominance. We'll talk about some really exciting developments that have taken place there. We are in altcoin season. If you don't think we're in altcoin season, I don't know what you're looking at. We are in altcoin season. I know that the P&Ls haven't really showed up yet, but I am seeing exactly what I need to see to convince myself that a rotation is taking place. Like a rotation is already well on its way, and there's lots of liquidity going out of Bitcoin and into alts. And you can see that on Bitcoin dominance. But before we get into that, let me just clear this QR code here for just a sec so we get a better shot of the frame. Let's cover Bitcoin. Let's cover Bitcoin real quick. Don't forget to drop your questions and tickers into the chat, and we'll take a look at those. Yeah, so Bitcoin, beautiful, beautiful. So we called it in the group. If we go over to Bitcoin chat, this is, again, 100% free. We made a few videos talking about the green diamond bullish divergences that were presenting themselves. Made another video explaining that the divergences were taking place. A lot of people, weren't convinced, but those green diamonds have played out. We got a green diamond here, a green diamond here with a 3 thrust bullish divergence. So what that means is you had the first one is not a textbook divergence. So somebody called me out on this in the private group, and I just want to explain it really quickly why in my world this is a divergence. Because when you read the textbook, it's not a divergence. It's not a technical divergence, but I'm going to teach you a little bit about how divergences work in terms of how I'm interpreting the data with a divergence and why I considered this to be a divergence. But before I do that, just let's cover the 3 thrust divergence. So we had a low, we had a lower low, and then we had a low and then a lower low on price. Whereas with the RSI, let's make this just a little bit bigger. We had a low and a lower low. That's where the technical lack of divergence is. And then we had a low and a higher low, a true textbook divergence. But here's the thing. The RSI is sitting at a support range. The RSI was at the 30 range for oversold conditions. And it was flat. It was basically landing on a support. Whereas with price, we had one support level hold and then come down to the next support level. So on price, we found a new level. On RSI, we maintained the same level. So for me, that is a divergence. Anytime the lows of price disagree with the lows of whatever oscillator you're using, whether it is the MACD, whether it is the awesome oscillator, whether it is the RSI, anytime the lows of price disagree with the lows of the oscillator, that is a divergence. You don't need to learn bullish divergence, exaggerated by divergence, hidden bullish divergence. No, you don't need to learn that. When the lows disagree, it is bullish. When the highs disagree, it is bearish. That's it. That's all you need to know. So when I'm looking at this, the lows disagree. The price took a new level lower while the RSI did not. So that is a bullish divergence. Not a textbook one, but I just wanted to explain that and justify what it is that I meant when I was in the group talking about this bullish divergence. So we got the green diamond bullish divergence, 1, 2, 3 divergences, boom, right up to the top of the channel. Right up to the top of the channel, getting a little bit of a pullback, but we just opened up a fresh daily candle. I think that's the pullback. It's basically it. The bulls are in control here. I think that, this is a pretty strong signal to the market that we have at least 25 days of rally ahead of us. So I don't think anybody's going to be too bearish here. I don't think anybody's going to be piling on too many shorts. So this might be the pullback right here at 116.5. Which is a pullback to the 50 simple moving average here on the daily chart. We could extend down to the 7, but I really don't think it's likely. And if we did come down to the 7, which is currently at 115.2, then that would be a wick. That would be just a liquidity grab. I think that the low is in for this, quote unquote pullback. Some people are calling it a pullback. This is just, ebbs and flows. Nothing goes in a straight line. Like, this is a pullback. There's plenty of ups during the pullback. This is a rally. There's plenty of pullbacks during that rally. We're in this sort of condition where we are, we're going to make a new high. I'm quite confident that Bitcoin is going to break past this resistance point of this downward sloping channel, and we are going to print a new high. Over the next 25 days, we're going to print a new high. So that's what I'm claiming here. You can, not financial advice. You can do what you want to do, but that's how I'm looking at things in the market right now. Mauricio Lopez, welcome into the chat. Good to see you. All right, let's talk about Bitcoin dominance. Bitcoin dominance. Now, ladies and gentlemen, it's pretty definitive right now. This is pretty definitive that we are in a very different trading environment when it comes to altcoins. We have now, if you're new to me, if you're new to this channel, first of all, I want to ask you to like and subscribe. But if you're new, you would have known that I have been very bearish on altcoins the entire bull market. I have not maintained a position that it has been a good time to go heavy into alts. That's not to say that certain alts didn't do, very exciting rallies. That's just a blanket statement to say that the average altcoin investor, meaning if they held no Bitcoin, the average altcoin investor is down really, really significantly in their portfolio, as opposed to the Bitcoin investor, which is up over 5x. So that's kind of the market environment that I've been talking about since basically 2021. 2021, we have not had an altcoin season since 2021. And I have said, no, don't buy alts. It's not the time. It's not the time. It's not the time. And people were, really frustrated with how bearish I was on alts. And that is completely changed now. That is completely changed. Now is the time where the general altcoin investor is going to vastly outperform Bitcoin. Now, that's a very matter-of-fact statement. And obviously there are variables. And obviously, nothing in markets are 100% this way or that way. There's always nuance. But based off of historical performance and what we've seen in the past, the market conditions that I like to see that are favorable to the altcoin trader have just started. They just started as of June of this year. They have just begun. And we are falling out of this channel with really high time frame closes. This is a weekly close that, in the next 2 days, this is going to close red. I don't see how this candle is not going to close red. And we said that altcoin starts below 61.8. We're at 58.6. I think that this move right here, the point at which we're at right now, to probably somewhere around 41, 42% dominance is going to be the altcoin season. Now, a market environment like this is rip roaring crazy. This is, these types of market environments where you see this free fall in Bitcoin dominance. That free fall represents the liquidity shifting out of Bitcoin and going into alts. OG Bitcoin traders like me that are like, I like this alt, I'm going to throw a Bitcoin in it. I like this alt, let's throw 25 million sats at that. When the liquidity is coming out of Bitcoin and going into alts, that's when you see the free fall in altcoin dominance. And it's only when OG Bitcoiners are selling their Bitcoin to buy alts that you have actual altcoin seasons. If people are just taking their USD and charging their credit cards and going to the banks and going to the crypto exchange and buying alts, that's not altcoin season. Altcoin season is when Bitcoin is being sold for alts. That is the market environment that I think we are in right now. DaVinci21, great stream. JT, what do you think of my analysis in the group and the fractals that are playing out? I am a fan of fractals with a caveat. So DaVinci21 is talking about the 2021 cycle. So he's kind of doing like a 10x multiplier in terms of price on the 2021 cycle. Let's actually go over to the weekly. Let's go log. And he's referring to the prices. Oh, this is market cap. Let's not do market cap. Let's go back over here. Let's turn alpha metrics off because it's a little hard to see. And we're talking. Let's do ETH because I think most of the fractal analysis was on ETH, I believe. Yeah, let's go ETH, USD. Come on, we need more history than that. What's going on here? Why is it? Oh, that's why futures. There we go. That's what we want. I was wondering where all the options were. Here we go. So kind of the pound for pound from the prior cycle was a high of honestly, I have not been paying attention to the analysis. Like you've been posting it in the group. I do like the odd fractal, but I kind of look at fractals more from a structural point of view as opposed to a price point of view. And, the pound for pound moves of this fractal, we're looking at, I don't even know how you got to 120 on this. You know what? I'm going to bail. I'm going to bail on this because I don't even know what it is. 117. You were calling 120 to 116. I don't even know what it is. I don't care, honestly, because, the highs come in with hype and retail. So your fractal, although valid so far, eventually becomes invalid. There's no fractal that has existed in the market that goes on forever. Like the fractal eventually breaks. You can take snippets in time where the fractal matches, and the certain structural components of the market match because human behavior is always the same. Fear and greed is a primal reptilian thing. So you get patterns in the market that often present themselves, but context is everything. And for me, where you were prior to this cycle, down here, if we're talking that the peak came in at, 20K and then went down to 3K, and then back up to 13K. This is a very different environment from where we are today, because this whole part of the fractal, this whole part of the equation was retail FOMO, big time retail FOMO. And we just don't have that. We just don't have that. So although the fractal is interesting and it's nice to, pay attention to patterns that you see in the market, the thing that I don't like about your analysis per se is the fact that you're calling a top. I don't think that Bitcoin is at a top, because every single market cycle top in Bitcoin, all of the market cycle tops, this market cycle top was retail FOMO. This market cycle top was retail FOMO. This was a dead cat bounce that made a new all-time high, but still retail FOMO. This is not retail. Retail is not here. Retail is not here. They are not here. Look around. Nobody's asking you. Uncle Jim ain't asking you. Aunt Lucy ain't asking you. Your mom and dad ain't asking you. That Facebook friend that you had, that you went to high school with isn't DMing you. Hey, you still in that Bitcoin? Nobody is here. Retail is not here. This is entirely ETFs, and this is entirely Bitcoin treasury companies. It's institutionalized retail FOMO. Now, you can make the argument that Bitcoin treasury companies have had a little bit of a retail FOMO moment, but it's not the levels of FOMO that we've seen in prior cycles. Now, it's entirely possible. Bitcoin really only has 3 data sets, 3 complete worthy cycles paying attention to. So you can make the argument that maybe we just don't get retail FOMO this cycle. But the trend is your friend until it ends. And until I see sentiment get a lot more euphoric, I'm not calling a top. There was nothing euphoric about this top at all. It's just the same people from the prior cycle buying and selling and, piling on leverage, while institutions, sovereign wealth funds, and nation states are buying in the background, propping up the demand side of the trade. So, yeah, I do trade a lot based on sentiment. And from a sentiment point of view, I'm just not seeing what I need to see. Now, what do I think as far as where we could top out this cycle? Because I think that's a much more interesting question to ask. And I'll give you my thoughts. Yeah, no new people yet, bro. We're early. I think that we're early, but it's tricky because we're at the end of the cycle time-wise. And this is why we have to practice a little bit of caution. I'm very interested to see how the market reacts to the interest rate cut. The reason that I want to pay attention to that is the interest rate cut could be a top signal, because the whole market is waiting for a cut. So because it's a crowded trade, and because the whole market is looking for a cut, and because rate cuts are technically fundamentally bearish, that could be a top. But the question is, how high do we go over the next 25 days? How high do we go over the next 25 days? Remember, Bitcoin's largest moves, most of Bitcoin's gains in every cycle happen over a period of 20 days. So over a 4-year period, Bitcoin's largest price advances happen over a period of 20 days. The biggest moves in Bitcoin, when you captured those big moves across the cycle, account for about 20 days of price action. So we have 25. We could get to some silly levels. Let's see what some of those silly levels might look like. We're going to go from cycle low to cycle high to cycle low. And we're going to put this on a logarithmic. And for me, the next danger area is at 170K. So just like you saw in the thumbnail, Bitcoin at 170K, ETH to 20K. I think that those are entirely possible. And I think that it's not crazy. It's certainly not crazy for Bitcoin to go to 170K over a 25-day period. That's not crazy at all. Ethereum getting to 20K over a 25-day period, that's a little bit more far-fetched. I don't know if that's really realistic. But in order for Bitcoin to get to this first Fibonacci caution zone, it needs to do a 53% move, which Bitcoin can do in a week. Bitcoin can do that in a week. So the first kind of area of interest for me for a potential market cycle top is going to be at $176,000 approximately. We'll call it 175. 170, 175 is kind of that first area of real kind of, let's be careful here. Let's pull some chips off the table, probably close some positions. Let's secure the next 5 years financially. So if you know how much you spend a year of, if you know what your cash flow is for the year, it might be a good idea to maybe lock in a year or two of capital. And then the next zone, which I personally think is going to happen. I don't know how we get there. I don't think we're going to get there over the next 25 days. But I think by the time this cycle is done, I think there's a very high probability that we're up in the $340,000 range. And there's a lot of people kind of talking about that $300,000 to $400,000 range. There's a lot of confluence up at that kind of $300,000 to $400,000 range. So I think, provided this cycle can continue, because it's been quite linear so far. Like, look at how straight this line is. That's not typical. Like, we need to deviate from the straight line. Usually Bitcoin gets a little hot, it gets a little excited, and it really extends beyond kind of that mean price for Bitcoin. This is why this market cycle has been so boring, by the way, is it's just been in a straight line up. It's so ridiculous. It's so ridiculous when those words leave my mouth. Bitcoin has been so boring because it's just been in a straight line up, but it's just this one straight line. It's trading like the S&P. It's just, a series of ebbs and flows above and below this straight line in Bitcoin. I'm waiting for the euphoria where we deviate and really take a run beyond this, because it's that point at which you get that fallback. So if things do get very exciting and we do enter into what I believe will be the real retail FOMO, where everybody's calling you and Bitcoin is just a sure thing. It's going to $2 million a coin, whatever the case may be. If we do hit that kind of level of positive sentiment in the market, and again, I don't know how we get there. I'm just going to observe the behavior of people from a sentiment point of view as to, what it would look like once we are there. Then the 1.272 fib extension brings us to damn near $800,000 a coin. Now, this is where I have kind of said, if the right conditions are there, I think we get just shy of $1 million, just shy to just over $1 million, between $750,000 to $1.2 million per coin. And then if you want to get real crazy, and this one comes from Max Kaiser, but it's interesting to see here on the Fibonacci extension. Max Kaiser has said on more than one occasion, Bitcoin's going to $2.2 million a coin this cycle. So, the 1.618 fib extension, which is the least likely outcome by like a large margin, does bring you at 2.2 million per coin. But don't count on that. If it happens, great, fantastic. Nobody's going to argue with that. That'll be a really cool move. But it's less than a 5% chance, like less than a 3% chance of happening, in my opinion, but certainly a possibility. All right, let's get back into the alts. So we got this altcoin that is basically loading, where I think alts are going to 30x. We've got our portfolio. Let's take a look at what's going on with ETH. Now, this is really loud and annoying and hard to read. Let's turn alphanumerics off for just a moment. And let's go to the weekly, because ETH has a lot of data for us to interpret. If this weekly candle, which is presenting as a breakout candle, if this weekly candle closes at any level above this level right here, if this closes at any price above 46.27, ETH is going for it. ETH is going for it. Now let's do the similar sort of Fibonacci extension on ETH. Let's go from the market cycle low. Oops, that's not what I want. We'll go from the market cycle low to the market cycle high, back down to the market cycle low again. Turn on logarithmic, go back to auto. And there it is. The first, what I believe to be achievable target for ETH. So if Bitcoin goes to a 170, it's plausible. It's plausible that Ethereum could get to 20,000. That's crazy. That's crazy to say, but it's plausible. It's not that far. Like if capital rotation really accelerates into the altcoins, if you see Bitcoin dominance crashing to 42%, then this is not that far-fetched. It's a big move. Granted, it's a way bigger move. It's a 50% move in Bitcoin to reach that first fib. It's a 350% move in Ethereum to reach that first fib. So it's by no stretch of the imagination a lot larger of a task to achieve. But there's a lot of Ethereum ETFs that are doubling the amount of daily volume that Bitcoin ETFs are doing. But not only that, there's now this new narrative, people are spinning up Ethereum treasury companies. And so if the Bitcoin treasury companies go on another massive run, you have the trickle down narrative effect of the Ethereum treasury companies, and they are just a lot more reflexive. Like Ethereum is a far smaller market cap than Bitcoin. So if you start throwing institutional grade money, institutionally sized money at Ethereum, it's not that far fetched to see a $20,000 Ethereum. Now, are we going to expect? Yeah, now this is just crazy zone. This ain't happening. There is no Max Kaiser prediction of Ethereum. So we're basically going to ignore that level. But, these first two seem somewhat plausible. Even 50,000 seems crazy. 20,000 in the right market environment seems plausible, not too insane, even though that's an insane move. All right, so Ethereum, this is a breakout. We're waiting for that level to clear. If we clear above, what did I say, 46? Yeah, anything above 46.50, Ethereum is a breakout. That is a breakout from that point. So, but this is already just such a strong move, such a strong move. Ethereum really finally has some weight behind it here. And you can see that too. So here's a perfect example. ETH BTC. This is why, I got to look at the dollar chart, because people's eyes just glaze over and they don't even know what the fuck they're looking at when I look at a Bitcoin chart. But this is why I've been so bearish on alts. Look at this. This has been a horrendous time to be an Ethereum investor. For about 1,200 days, if you were an Ethereum investor, you were not having a good time. For 1,200 days, you have been really trying to understand why Bitcoin is doing so well, while your Ethereum investment, which traditionally in the last cycle exceeds Bitcoin, has been doing so poor. For 1,200 days, Ethereum has been absolute dog shit. And I told everybody, I got laughed at when I posted this. When I first posted this, I said Ethereum's going to 3 million sats, and people laughed. We not only did we go to 3 million sats, we went to 1.8 million sats per ETH. And I don't know. They're not laughing now. They're beat to shit. But this is a beautiful, beautiful sign of strength. And we finally have the ability to change our bias, flip that narrative, and be bullish on ETH. I am bullish on ETH. I am long-term bullish on ETH. This is looking really good because we have been waiting for this downtrend to break. This downward sloping line of resistance has been unbreakable for years. And now, boom, massive, high strength, high volume. Not so much. Nobody really trades the Bitcoin pair anymore, but I'm sure if we looked at the dollar pair, you'd see volume. But big strength, strong move here in Ethereum. Let's go back over to the dollar pair. And that pairs beautifully with what we're seeing with an all-time high break of Ethereum. It's looking good. Looking good. Let's see how total 3. This is probably the better chart to be paying attention to anyways, unless you guys have some specific tickers that you want me to take a look at. But I'm going to be wrapping things up soon here. Total 3, this is the entire cryptocurrency market cap, excluding Bitcoin and excluding Ethereum. So it's basically everything else that we haven't already talked about today, is getting ready for a break. So once we see that, you know, this is the Ethereum breakout, this is what's coming for total 3. And when total 3 breaks above that $1.15 trillion market cap level, we're going into the banana zone, as Raoul Paul famously coined it. We're going into the silliness. We're getting into the, you know, mainstream FOMO. The retail FOMO will begin at that point, because retail is not coming in to buy Bitcoin. Retail will not buy Bitcoin. They fucking hate Bitcoin. Why do they hate Bitcoin? Because Bitcoin is over $100,000 a coin. I'm never going to buy a whole Bitcoin. Fuck Bitcoin. What's it? And then they come in like, well, what about Cardano, or what about XRP, or what about this thing or that thing? What if that does a Bitcoin? Retail is going to only focus on alts. Retail is going to be the force that is driving this chart right here. And it's going to be glorious as soon as we break above this. So, you know, if you're on the sideline, if you're holding a large cash position and you want to be 100% sure that when you allocate into alts, it's going to truly outperform Bitcoin, 2 things. Make sure Bitcoin dominance is continuing to print red candles, and make sure that we are above. We have a breakout on volume on crypto, on total 3. If total 3 is rallying and Bitcoin dominance is printing red candles, it's going to be one of the easiest trades you've ever made. Absolute easiest trade you've ever made. All right, guys, before I head out, don't forget to join into the free trading competition where you can win a top prize of $5,000. If your portfolio produces the highest amount of percentage gains, you will win $5,000. So definitely get into that. We don't do these promotions very often. In fact, this is our first kind of giveaway that we've ever done. So definitely take advantage of that. I think that there's not a lot of competition. We're not the biggest channel in the world. We're small. I think there's only how many participants? How many participants are even here? There's not that many people that you would be challenged against. Let's go to the leaderboard here. You got 10, 20. I mean, like 20 people. You're in competition with 20 people. If you can't grow your portfolio by more than 2.5%, then you're not a very good trader, and you know you're not worthy of the competition to begin with. But you're against 20 people, so you have a 1 in 20 chance of winning $5,000. So definitely scan the QR code, sign up with BitGet, deposit 500 USDT into the account to trade for the competition, and you're against like 20 people and you can win $5,000. So it's a pretty good deal. It's a pretty good deal. We're probably going to lose money on this one, but you know, we're trying to, you know, support the community and get people hyped up and really nail home the fact that we are indeed in altcoin season. And don't listen to the FUD, don't listen to the haters, don't listen to the bullshit. We got plenty of upside ahead of us. Might get a little rocky around the FOMC meeting 25 days from now, but we got plenty of upside ahead of us. All right, I'm going to close things out there. So thank you all for joining into the live stream. Don't forget to leave it a like. Don't forget to subscribe. Drop a comment down below. Do all the things. Get into the Discord server. We got a QR code popping up on the top corner there. Get into the BitGet trading competition. And until next time, please trade safe. It is a jungle out there.